there's a lot of good in terms of what the NAFTA headlines. This obviously gives the president a victory, at least in the short term. This, in some ways, vindicates, I think, his approach, or in his mind, his approach on in terms of using tariffs to get concessions. And you know, it's good for Republicans. I think the bad, though, is that, of course, this now just focuses, this clears the deck, so to speak, and sort of focuses the administration's efforts on China, and then also keeps auto tariffs in the mix. So I think there's some real good in terms of the NAFTA agreement, but there's also some negatives.
There's been some discussion of the language in the agreement that basically says if you're going to deal with a non-market economy, basically China, you got to let us know. There's ramifications if you do.
Right.
Does that mean, is that an isolated front?
Yeah, so not only do you need to let them know, but then the U.S. has the ability to actually withdraw from the trilateral agreement. Yeah, so, and then also the side letter on auto tariffs as well. So again, there's some good here. It reduces uncertainty regarding NAFTA, but it also means that these trade issues, both China and auto tariffs, will remain, I think, probably a headwind in terms of market sentiment and also potentially to growth.
All right, so where does that lead us to, on equities at least?
Yeah, equities, to me, face the biggest risk that they've had in a long time, which is that the Fed is on pace to hike. The most recent statement clarified their position to do so, in my view. It was actually, in my view, somewhat hawkish. And the Fed stays on pace to do so, really, as the rest of the world slows. So while the news on trade and tariffs is good, as I look at the soft data in Europe, for example, European PMIs are beginning to roll over. The Tenkan is beginning to roll over. We have Latin America and emerging markets that are beginning to roll over economically. I think much of Latin America, frankly, will be in recession next year. Now, the question is, what's the lag time between that slowdown in the rest of the world and the U.S. equity markets? And we know from experience that these late-stage rallies can be pretty powerful. And so we've been pretty careful not to get too bearish too early, but the risks are there for the Fed to overshoot, in our view.
So you do SPY over Russell, large cap over small cap?
Yeah, I haven't been a big buyer of this idea that the Russell is some sort of a safe haven. Clearly, many investors have, and I've seen allocators talk about it that way in meetings on one-on-ones. That said, I think the Russell is at serious risk here, whether or not we had an agreement on trade and tariffs with NAFTA or not. I think they're stretched, and I think they tend to de-risk in advance of the S&P historically.
So now we've had time to go through some of the details in this USMCA, Libby, and I'm surprised to hear you so positive. The Wall Street Journal op-ed page today says new NAFTA is worse for trade and economic growth than the status quo. Talks about managed trade, talks about setting minimum wage requirements in Mexico, and all sorts of other rules and regulations that are not free trade.
Right. Well, I mean, so just to be clear, I think that I'm positive in that it reduces a potential source of uncertainty for the market. The other dynamic here, in addition to the things that you laid out, Sarah, is that Congress has not ratified this. So this is really just an agreement in principle. The president is expected to sign it, obviously, but all three legislatures, Canada, Mexico, and the U.S., actually have to ratify this. And that, it looks like it's probably not going to be until 2019, and that could be very much a heavy lift, especially if Democrats take back the House. Because remember, Democrats are not the party of free trade. If you look at CAFTA, if you look at NAFTA back in the 1990s, if you look at TPA, all of those passed with a majority of Republicans and a vast minority of Democrats. And so if this is in front of Congress in 2019 with a Democratic House, you could see Democrats really trying to go back to the table and actually renegotiate some of these things. Yeah, so temporary short-term uncertainty has decreased, but certainly has not been reduced further.
Yeah, a lot of people say that the Democrats could get on board because there are pro-union, pro-worker sort of provisions in this. On the other hand, are the Democrats really going to give President Trump a victory on trade, which is one of the major highlights of what he campaigned on in his presidency?
Exactly, and I think what we would expect is if Democrats take back the House, that they're going to want to put their imprint on this free trade agreement.